The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back. I'm Chris Temple, editor and publisher of the National Investor Newsletter, as well as vice president of strategic media. And those of you watching on video on our National Investor channel might have caught a quick glimpse in our montage of the introduction of today's special guest, and he is Scott Melbye. Scott is perhaps the greatest mind, and with a very, very long and distinguished track record in the uranium and nuclear energy industry in the United States. These days, Scott sits at the helm of two public companies. He is the chief executive officer and president of Uranium Royalty Corporation, which was set up several years ago to use the royalty model and so forth in providing funding to projects which eventually will be producing. Some of them are, and that's where they get their money from. The company's done well. Much more so has Uranium Energy Corporation done well. Scott has been its executive vice president now for 10 years. Those shares are up tenfold from their low in early 2020. They've been one of the best performers among straight uranium-related equities. Besides that, Scott is the president currently of the Uranium Producers of America, very important position, which has him back and forth to Washington constantly and having a very big hand, frankly, in the rebound of our domestic uranium and nuclear energy industry. Beyond that, he's a past chair of the board of governors of the World Nuclear Fuel Market. He has worked in the past with Cameco, with Uranium One Corporation. He has been an advisor even to the chairman of Kazatamprom, which is Kazakhstan's big state uranium company. When you boil it all down, folks, basically, he is the most traveled and arguably the most knowledgeable executive in the United States when it comes to this sector and this industry. So in this session today, what we're going to be doing is appealing to Scott's wisdom and his take on the current state of the nascent uranium and nuclear energy bull market, which a lot of us believe, and you'll hear from him as well, is about to go into its second big phase. The first one we enjoyed over the last few years, as I just pointed out, where UEC shares are concerned, especially. We've done a lot of backing and filling where the spot price of the uranium is concerned this year, but for a couple interesting reasons you're going to hear from Scott. But beyond that, this is a market that still has got a very, very, very bright future ahead of it. Now, his role today is as an overall advisor. He's going to be back with us several days from now and specifically put on his hat as the executive vice president of UEC and give us an update on that company, notwithstanding most of that conversation coming after this video. He and or myself may be making what are construed as forward-looking statements, either on UEC's behalf or beyond that. So we just want to let you know that a lot of what we say is, well-intentioned. It's based on the past. It's based on how we see things today. Things may or may not pan out down the road as we suspect that they will, as the landscape is presented before us right now. But that said, I'm telling you that, and I said this on an interview that I did with a media outlet recently. I'm not near the expert on uranium that Scott is, and a good part of what I've learned from him over the very many years that we've known one another. But I will tell you that today, with the uranium spot price in the mid-70s a pound or so, well off of its high of over $100, we still have got a situation where we are up strongly from the bear market low when the spot price of uranium was under $20 a pound. And I think that when you look at everything, and that's what Scott's going to unpackage for us in just a second, when you look at everything today, I think that the uranium sector, nuclear energy, a lot of the good companies that are involved in this are every bit as bullish today with uranium at 75 or $80 a pound as they were way back when uranium bottomed at $20 a pound, because the story just keeps getting better. And here is my old friend Scott Melbye, as I said, one of the top uranium, if not the top uranium executive and mind, really, in the U.S. Scott, good to see you as always.
It's always a pleasure to be with you, and there's a lot to unpack in the uranium market these days. It's very exciting.
That's an understatement. The last time you and I crossed paths, I missed you in New Orleans, unfortunately. I didn't make it, but back in the spring, things were hot and heavy when we were at a conference in Washington, and you and a bunch of other guys were actually up on Capitol Hill at the time working on legislation, which was the legislation, of course, to stop importing uranium from Russia by 2028. And you and I were both musing at the time, what if Russia says, well, why wait that long? And so we got that news recently. And we're going to get into that and a lot more. But first, let's go back to the beginning. When you and I first knew one another, we were in the long, deep doldrums for uranium, for nuclear energy. We saw the uranium price bottom under 20 bucks a pound in this first big move, I think, of what's going to be a multi-year, maybe generational bull market. We've been several times higher than that, consolidated in some ways this year. So, what were a couple of the big catalysts for folks that are not that familiar with the story that led to this resurgence back starting 4 or 5 years ago?
Yeah, no, I think when we were going into this bull market, we're really pointing to kind of three main catalysts that have now become four, but they're really, the transition to green energy and the need for carbon-free energy really caused nuclear to become supported by the political right and left. Even the Biden administration came around about halfway through the administration and embraced nuclear power in a very big way. And so we've seen public opinion change much more positively now towards overwhelmingly positive towards nuclear, and seeing plants, large plants and small plants moving forward. We saw the geopolitics, obviously, with Ukraine and Russia being such a significant supplier to the West after the breakup of the Soviet Union. Now, countries moving away from that reliance is really putting a greater call on Western uranium sources in Canada, the US, Australia, and then just the supply and demand fundamentals. We're in a structural deficit of 50 million pounds, less than what the world consumes of 200 million pounds today in terms of current production. And that gap is increasing, not decreasing, because the production needed to close that gap now is not coming on as quickly as we thought. And the inventories are largely worked down due to the production discipline and speculative buying on the spot market. And demand now doubling for nuclear power over the next 15 years. So, and some pointing to a tripling of nuclear power by 2050. So if that was not enough, we then have now just the need for new energy emerging in the developed world, the electrification of society, electric vehicles, homes and businesses turning to electric power, and the data centers with AI, profound increases and demand growth in electricity in the United States and the developed world that has really eliminated any sort of reserve capacity that we've enjoyed in the United States on our grid. And now, nuclear plants being seen as an attractive counterparty for Amazon, Google, Microsoft, to come in and buy that carbon-free power. So we have all these coming together. It's not surprising uranium went to $106 a pound, and it has pulled back into the mid 70s. But I wouldn't call that a fundamental move. It's really can be explained in the spot market machinations, but it's a wonderful buying entry if it's impacting your favorite uranium equity. it's a time to buy because we really see that being short-lived in nature.
Well, I agree. And you and I, when we've had these discussions before, among the things you've mentioned, and I want to get into a little bit deeper in a couple of these subjects, a lot of people, I think, gasped when the news came out not that long ago that of all things, 3 Mile Island was going to be brought out of mothballs, at least one reactor that wasn't damaged. And
Yeah.
who would have ever thought that would happen? And that was Microsoft, was that one, right?
Yeah, it's you've had Microsoft funding the restart of 3 Mile Island to get that dedicated carbon-free power. You've had Amazon go to Talon Energy and try to go what they call behind the meter to buy that output from the nuclear power plant before it hits the grid. The FERC regulators have something to say about that, but however that case ends up, it shows that the nuclear power plants on our grid are now huge energy assets that are being competed for on the demand side. And then the next step up in that game is to build small modular and even large reactors. Virginia, Commonwealth of Virginia, is consuming about 20% of the electricity they generate in the state by data centers. That's going to 40% in just the next two
Wow.
or 3 years in Loudoun County and those areas around Dulles Airport, where you just see
Yeah.
uh, 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 all these data farms and data centers. So, it's not surprising Oracle and Microsoft and others are talking about building their own small modular advanced reactors to power these data centers.
Amazing. In the past, one of the things that you pointed out that was kind of an added under the radar, somewhat bullish reason for uranium to have a multi-year and again, maybe even a generational move higher is because of all of the main base load power in the world converting more and more to nuclear energy because it's carbon free, it's safe with modern technology, et cetera, et cetera. But you were the first one to point out to me a while ago that when you look at these different charts that show that big structural deficit of uranium supply going forward, they weren't contemplating, and I think a lot of them still don't contemplate the demand that's going to be there, which is, as far as the data centers, it's going up all the time for
Yeah.
conventional energy power plants. But then you've got the SMRs that are going to be coming out over time, where you're going to literally have SMRs that are going to power an industrial facility, an underground mine, perhaps, any number of things. And it's
Yeah,
really going to take,
petrochemical facilities,
yeah.
desalination, hydrogen production, data centers. And you're right, that demand really hasn't been fully baked into supply and demand forecasts. Some might say, well, those are going to start coming in 2030 onward. And yes, they are, but they're going to come on in a way that will revolutionize the way energy is generated and distributed. But that's not that far off. And the first of a kind units in Wyoming, in Ontario, Canada, in Texas, are being built with US DOE and Canadian government support. And so, that demand is upon us. And I just, to your viewers, I just put this out to you. If these tech companies are willing to go behind the meter to buy electricity before it hits the grid, well, what's to stop them from going behind the market to access uranium conversion and enrichment and not, subject themselves to the whims of the global uranium market? So keep an eye on that space because I think that's really going to be a trend in the next 3 years.
Well, that's a great point. It makes all the sense in the world. It follows with what Tesla and GM and Stellantis and whoever else has done with trying to get offtake agreements for lithium, for
Yep.
nickel, for a variety of things. It makes perfect sense. You cut out at least one or two middlemen in the whole
Yep.
process. And let's talk a little bit too, Scott, about just the commodity itself for a second, since we're on this. One of the things that you've done a good job pointing out to people, I've repeated it largely from your tutoring on this, is that one of the reasons why, besides all of the attributes that have even got Greta Thunberg saying, yeah, I guess this is the best way to go. You've got Bill Gates. You've got this is the most widely embraced alternative energy really on the planet right now, is this
Yep.
resurgence in nuclear energy. But looking at it from the standpoint of uranium as a
Mhm.
commodity, as a potential investment, whether you're buying one of the ETFs that hold the commodity or buy it, whether you're looking at a company like Uranium Energy Corporation, which you're the vice president of, or Uranium Royalty, which you're the CEO of. Um, there's a lot of optionality because the uranium price can get driven up to ridiculous levels and not make the finished electrical product uncompetitive because unlike other things, uranium is not a huge part of that. Give us some color on that.
Yeah, I mean, uranium and nuclear energy is quite unique. I think it all comes down to the energy density of uranium as a energy fuel. The amount of energy produced in such a small amount of uranium, can fuel a nuclear power plant for 18 months, 24 months without refueling. So, despite all the attention put by the utilities on uranium conversion, enrichment prices, and market prices, and everything else, it's 5 to 10% of the generating cost of the electricity. And compare that to electricity from natural gas, where 75% of the generating cost of the electricity is the gas fuel itself. So we can see a doubling, even a tripling of uranium. Utilities might not like it. It does cut into their profits to some degree, but they're very profitable right now, as you know, with the demand on electricity in the United States. It doesn't kill the golden goose here, and that's an important point. And, let's face it, we're in a deficit of 50 million pounds. Goes to about a £500 million over the next, 15 years or so. Higher prices are needed to stimulate this new production. And the other thing we got to remember is uranium is not the most efficient commodity like copper or gold or zinc or silver, where if you had this kind of price movement in the spot and long-term markets, you would have a lot of idle capacity of mines in South America, Africa, Indonesia that could come on and moderate the price increase. In uranium, we really don't have that. We have a small handful of sort of low-hanging fruit, which is already moved into production. UEC's mines, other U.S. mines, the Paladin Langer Heinrich mine in Namibia, and the Boss Honeymoon mine in Australia. Those were already existing facilities that were restarted and are the fastest movers in this story. The next 5 to 6 mines needed by 2030 need to come from really, new mine developments. And some of these are in sub-Saharan Africa, where there's political issues, or in Kazakhstan, where there's significant geopolitical influence with Russia and China that's largely capturing most of their production going forward. So, this isn't a situation where uranium prices, I think in 2025 are trading back up over $100 a pound. That doesn't mean we have an onslaught of new mine production. In fact, it'll be very gradual, which for the investor is nice. This isn't a flash and crash kind of situation that you sometimes see with commodity movements like that. I think we're in a sustained strengthening over many years. And, I think a lot of people are asking me, well, Scott, this is all great, but uranium price has fallen, is drifting down now to around the $75, $76 level. Still a very nice price level, but it's down from where it was at 100. This is really just kind of the unique nature of the spot market, where we had a handful of spot market traders that needed to complete sales before year end to book cash. So they were kind of competing for sales at a time when many of the utilities and other buyers have kind of completed their purchases for 2024. And then another thing, which I hope we'll circle back to, has to do with China. We're seeing an increase of Chinese enriched uranium deliveries to the US, where they're selling enrichment services from China. And I'll explain what the ultimate source of this is. It's probably a circumvention of US trade law, frankly, because it's really resulting as their purchases of Russian enriched uranium turning around and selling it into the US. But that's freeing up feed that US utilities are giving to the Chinese. The Chinese are then turning that to cash in the United States because they can't take those pounds and ship them back to China. So we're seeing Chinese selling, which is not very popular up on Capitol Hill. I just returned from Washington. Everyone's very happy to be getting off of this Russian addiction, especially now that Putin has shut the door on us the other way. We can't revitalize our domestic industry fast enough. But now, when Congress sees China taking this kind of circumvention, displacement, swap type activity arm in arm with Russia, there's a lot of voices that want to shut that off ASAP. And that can happen through three things. It can be expanding the Russian uranium ban to include Chinese uranium. It can be through trade law. If they're violating our trade laws, we have penalties and sanctions that could be imposed by law. And thirdly, you have Trump's propensity to impose tariffs. And so the Uranium Producers of America have recommended a 50% tariff on Chinese uranium, which, some combination of those three should put an end to this sort of sudden and abnormal increase in Chinese imports and nip that in the bud. We don't need to get on that addiction just getting off of the over-reliance on Russia.
Well, no, and I mean what they're doing in a way, I guess, is the same thing as doing an end run where EVs and certain other things are concerned. They set up shop in Mexico, and so we're importing, we're quote importing from Mexico, not importing from China.
Mhm.
And the whole thing you described with uranium, correct me if I'm wrong, that's like Russia exporting natural gas to India, and then India sells it to Europe. So Europe can say, well, we're not buying it from Russia, you know.
Yeah. Well,
Uh,
the Department of Commerce is quite familiar with it, having seen it with all the Iran and Russia oil sanctions.
right.
That displacement swap is the oldest game in the book, but everybody's onto it. So again, I think all these things I think will be temporary in nature, and in 2025, you have just the fundamentals, this structural gap, which is quite significant, resuming that spot price increase, above 80, 90, even $100 a pound in the new year. And that will really have an impact on the uranium equities that have kind of drifted back a bit as a result.
Well, and I think too, you've just done a great job explaining it for us, Scott, that at the same time you've seen the uranium spot price correct for these reasons from 106 or whatever the peak was to the mid 70s to maybe 80, back and forth in there for quite a while now. The
Mhm.
prices for enriched uranium are still at a new cycle high, aren't they?
Yeah, so we do need to increase not just the uranium in the United States or in the West. Let's call it the West. All of our needs don't need to come from the United States, but we can't be without no production in the U.S. And I think we're seeing now five companies within the Uranium Producers of America who have restarted operations. So good things are happening on the domestic uranium front. On the enrichment side, you have Urenco increasing capacity for enrichment in New Mexico. You have Orano now wanting to do things in Tennessee. You have GLE and Centrus looking to start up new operations. So good things are happening there. Conversion is a little concerning because we have that UF6 conversion step in the fuel cycle is the smallest component, but you don't get enriched uranium without it. So, but I think the market conditions and the policy will probably correct that as well. But yeah, the prices for conversion enrichment are at all-time highs.
Okay. Give us a bit of a report card, if you would, Scott, as far as what you've seen in the recent past out of the U.S. government. I mean, we remember back during the Trump 1.0
Yep.
years that the groundwork was laid with the strategic uranium reserve, some other measures. Rick Perry, the energy secretary for most of that time, followed by Dan Brouillette. I mean, they were pursuing an all of the above strategy, which I'm sure is going to be the case this time around for
Mhm.
more or less. I think a
Yep.
lot of the EV subsidies are going to be gone, but Trump's not going to kill the EV industry or anything like that. But give us an assessment of where we're at right now as far as
Yeah.
what's happened to date and what more the government needs to do to, especially in these enrichment areas and whatnot, make sure that we've got, a self-reliant industry because we were it following World War II. We had a, civilian peacetime nuclear energy program. Nobody else had one. We
Yeah.
gave that up too, and now we're scrambling to get it back with everything else.
Well, we had a number of legislative victories yeah, back in Washington last year and early this year that advanced, well, no pun intended, the Advance Act, which looks to streamline the permitting and licensing of new reactors. The production tax credits for nuclear energy, was part of that IRA package. But in the fuel side, we saw the Nuclear Fuel Security Act direct $2.8 billion to uranium conversion, enrichment, revitalization in the US. And that went arm in arm with the Russian uranium ban. So all of that has been very constructive. And now we going into a Trump second administration. We're very optimistic that nuclear figures prominently. I mean, we didn't have to worry who would win in this election in terms of nuclear energy because both parties support nuclear for different reasons. On the left, it's really the carbon-free aspects. On the right, it's really nuclear as part of what President Trump is calling the American energy dominance. And what that means in policy terms is we will produce enough energy domestically in the United States to be self-reliant from foreign sources and have enough to export to serve markets in our allies in Europe and Asia. And in the electric sector, the plan is really that natural gas and nuclear carry the base load of our electricity supply and probably see a slower, this sort of rush to phase out coal-fired power plants. I think that will, be dialed back quite a bit. And thank God, because with the need for more energy, if we were going down the Democrats' path of energy, I don't think we would have enough to meet our grid's needs in the United States with what's happening.
No,
So we're
you're
going to need
right.
natural gas, coal, nuclear, wind, and solar just to keep up with all the energy growth. And I think nuclear, Trump has said that he would like, the streamlining and permitting of new reactors. I mean, there's no reason a small modular reactor can't be permitted in 2 years.
Mhm.
And he understands, the data center demand. And, he obviously is counseled by people like Elon Musk and Peter Thiel that have explained the nexus between data centers and AI leadership for America is going to depend on us having enough energy. So we're excited about a pro-energy administration that's going to reflect really well on nuclear power.
Well, even before we had this whole artificial intelligence industry come out, it was only a couple of years or so ago, Scott, we were talking about, wow, all this Bitcoin and crypto mining, look at all of the juice it's using. That's
Yeah,
baby stuff compared to
yeah,
what's going on with data centers and AI. And it really underscores, and you said it well, the one of my favorite phrases of another CEO, of friend of mine who's another energy company executive. He said, "This whole idea of there's an energy transition is a misnomer. There's an energy addition going
yeah.
on in this country and going on all over the world. Demand is not going down anywhere
No,
for anything.
yeah.
And sure, we're going to tweak it. We're going to have a bigger share will be nuclear energy. I even see charts showing natural gas usage continuing to at least creep upward, even with all the
Yeah.
alternatives, for as far ahead as you want to look as well. It's probably
Yeah.
the second best choice after nuclear, I would suggest.
Oh, we as Americans, we should love natural gas.
Sure.
It's abundant. We have a lot of it. I don't think we would want all of our electricity from natural gas
No.
because it's very volatile on price. But when you have it in baseload quantities in combination with nuclear, that's a winning combination. I think you're going to see a lot made of that. And, I think even already the US's shift to some degree from coal to natural gas and continued use of nuclear has allowed the United States to have greater carbon emission reductions than, say, Germany, which
Oh
was
yeah.
preaching to the entire world how, everyone needed to get there. And they've achieved zero in terms of carbon reductions in Germany.
Are
So
they still, Scott, really the only one out? Or I thought I read recently that Scholz was starting to soften his stance because how stupid is it for Germany to shut down their reactors that they had hypocritically because they still get nuclear inspired electricity from France. Okay.
yep.
And then strip mine for coal.
Yeah, literally tearing down old villages to mine the coal
Yeah.
in villages. It's really serious. I mean, Energiewende, this experiment that Germany went down 15 years ago, we now know what this looks like. It was meant to phase out fossil fuels and nuclear energy and be all renewables. And after hundreds of billions of euros invested, their electricity is twice as expensive as neighboring nuclear France. It caused them to rely on natural gas from Russia, which caused them to be compromised in the Ukraine conflict. And now, you're seeing German industry struggling. The German economy is in a shambles,
Yep.
and that's the engine of economic engine of Europe. That's not a good thing. If you're BASF, Siemens, BMW, you're not building factories in Germany anymore. You're going to the Czech Republic, Poland, or places like Alabama where you have abundant energy. And yeah, it's a shame that they've gone down that route. There are beginning to have discussions kind of coming out of southern Germany and Bavaria about restarting nuclear plants. I mean, there's probably only a couple there that you could probably still restart if 3 Mile Island can be salvaged. Some of those can, but maybe Germany looks to small modular advanced reactors. They kind of as a next step, but yeah, they've really there's other parties within German politics that are just stuck on doing the same thing that hasn't worked for 15 years. But they're really unusual. I mean, I think, you have Taiwan, Germany, Spain are kind of the outliers. Everyone else is reversed their phase outs. Sweden was to be
Yeah.
phasing out nuclear power and is now looking to increase by tenfold their nuclear generation capacity in the coming years. And that's been repeated in the Netherlands, Belgium, and elsewhere. So Germany's the outlier, but it's costing their economy.
That's a shame. And Europe is already a basket case. It's not strange that they've had to cut interest rates much more aggressively than the Fed. Their economy is sicker. Kind of an aside, I mean, their banking system never really did recover from the crash in 2008, and at least in relative terms, the US's became a bit more healthier, following
Hmm.
that. I want to go back, Scott, to one of the things that you said a few minutes ago, because I think a lot of people looking at this as investors and looking at different equities and so forth. And as I said in my quick introduction before you came on, I mean, if you look at UEC's share price, for example, from the bottom, it reached in early 2020 to now, it's up darn near tenfold, even after a bit of a correction. Uranium Royalty, which you're the CEO of, it's a different animal. It works differently. It's not the pure play on uranium like UEC is, but still, that's more than doubled in the same
Hmm.
amount of time. But one of the things I've always wondered about, and maybe you can answer this without stepping on others' toes. Um, you mentioned that by 2030, we're going to need to be getting some new mines
Yes,
online. Now UEC, correct me if I'm wrong, and we're going to, folks, incidentally, after several days after this video is up, we're going to go into a specific update on UEC because there's
yeah,
been
there's
a
so
lot
much
of
going on there that we could take
yeah,
full
we gotta
advantage.
talk about that separately. But for present purposes, UEC, if it gets up to full production everywhere in both the US and Canada, we're looking at what, 12 million pounds a year
Yeah, in
in that
excess of 20
neighborhood.
million
So you've
pounds.
got
Yep.
them, you got Energy Fuels, you've got Encore, you've got Next Gen. Cameco is getting back up to speed. When all of the big players in North America are
Mhm.
back to reasonable capacity, do you see that being spoken for by 2030 or before, after? Because a lot of people are
Yeah,
wondering where the next stories
yeah,
are coming from.
I think I think between now and 2030, we're in a market that you would characterize as one of scarcity. Um, World-class mines like Arrow and NextGen I think they're a 2030 onward play and very much needed in the market in that time frame. If they don't come on in 2030, we're in a world of hurt. UEC's aspirations between now and 2030, our goal is to get to 5-6 million by the end of the decade from the U.S. mines in Texas and Wyoming, and we're on track. We're investing with that in mind. Rough Rider is a 2030 on mine that can produce 6-7 million pounds a year, but that's after 2030, and some of these others as well. But the gap between now and 2030 is one thing. From 2030 onward, where nuclear power is continuing to double, if not triple, that gap's getting wider and wider, and we don't fill the gap even with that. We need new mines over and above what you've just mentioned. And don't forget that, Kazakhstan, which is the world's largest uranium producer, 40% of global production, is very quickly being controlled and consumed by Russia and China. Russia now controls more than half of the production and taking it for their own needs and for countries that rely on Russia for uranium. And the Chinese, through direct ownership and JVs, huge contracts they're signing, and those rail links across into China are locking up the other half. I think Kazatamprom reported that already 85% of their sales, were going to Russia and China. So I don't know if there's a commodity equivalent out there where the world's largest producer is not available to the West, but is, purely, focused on the BRICS, part of this bifurcation. So we need a lot more mines. Australia has lots of uranium resources. It's kind of state by state, whether mining is encouraged or not. Africa, some countries, are very interesting. Others have geopolitics like Niger, where Irano's been kicked out of the country. And, Niger was supplying 25% of French supplies prior to this. And so now Irano, I think needs to look more to mines in Canada. And so I think the biggest winners of new mines, not just UEC's operations, but others, is Canada and the United States. That's where you're going to see, significant increases in the uranium industries, and Saskatchewan being probably the biggest
Oh, sure.
beneficiary over this time.
Well, like another company has said for years, in some of their marketing pieces and whatnot, one of the exploration companies up there, Saskatchewan, truly is the Saudi Arabia of uranium.
Yeah.
It's the best, and the jurisdiction is important. You do see, obviously, that we're going to go in a direction with that, as we are with seemingly everything else, some of which we're in a better place to do as others, North America generally, in the U.S. specifically. But this move away from globalization and from foreign reliance is not going to change. I mean, I had to laugh recently. There's some talk that the president's going to invite Xi Jinping to his inauguration.
Yeah.
Whether Xi shows up or not, I don't really think that's going to change the economic and trade fundamentals a whole heck
No,
of a
and
lot.
even if, with Russian ban, on uranium, some have said, well, Trump will work very hard to end the war in Ukraine. I think he will within 6 months
Hmm.
have a deal for that conflict to end. But that doesn't mean he's pro-Russia. He's
No.
it's America first, and he wants to see domestic industry, thriving in the US, so much so that, he's really eager to slap tariffs on a lot of different industries. Whether that's correct or not, it's, he believes that's, he saw it work with steel, right? With the 50% tariff put on foreign steel, really revitalized the iron ore and steel industries in the United States. So, I don't think we have to worry that Trump isn't going to favor domestic production. I think he's going
Oh,
to be a
no.
very good friend in that regard.
Well, and you said also, Scott, and this is something that people need to remember, and it goes right in with the theme of the insatiable and growing demand for commodities of all kinds, for energy specifically. Even if there was some plausible political or geopolitical reason for both the U.S., the U.S. will drop the legislation saying we don't want Russian uranium after 2028. Russia will say, okay, you helped us end the war. Everybody get out of this in at least a reasonably good situation. We'll drop our embargo. The supply is the issue because that part of the world, you mentioned the BRICS, they want it,
Yeah.
whether there's a war going on or not. They
Yeah,
want
there's a deficit.
Kazakhstan's uranium.
Yeah, the 50 million pound deficit today assumes uranium is fully mobile and there's no geopolitical conflict. So it in that world there's a shortfall, and I really don't think that that will happen. Remember, the ban was passed with unanimous votes in the House and the Senate, and we're seeing good things happening in the uranium conversion enrichment world. I don't think we want to set that back, especially if we're building new nuclear power plants in the coming years.
And look, we could go on for hours with this discussion, and on the notes to both the video and audio versions of this, folks, make sure you look at it because I'm going to have a few good sources for broader information, how to keep up with the industry, what's going on with Scott, both of his companies, UEC and Uranium Royalty. But as we wind down, Scott, where are the shortcomings that you think are most worrisome? If maybe that's not an overstatement, but
Mhm.
the things in the most need for Trump to focus on and the Energy Department to focus on in this new administration. I mean, we've gone down the road somewhat. One of the things that actually, let me offer you one, and you might have some other
Mhm.
ideas. I don't think still we have seen much along the ways of this strategic uranium reserve either funded or supported, have we?
Well, we are. So the first tranche of this strategic uranium reserve, which came out of the Trump first administration, those first purchases of over 1 million pounds were made at the beginning of last year. And then you'll recall that the Nuclear Fuel Security Act built on that and is expanding the reserve to be an enriched uranium and a high assay low enriched uranium reserve. And the awards for the HALEU portion were made to 4 companies earlier this year, and the low enriched uranium awards were made last week to 6 companies. And the first step kind of focuses on the enrichment, but there is, in that legislation, these winning bidders need to maximize the use of U.S. origin uranium as much as possible. So a lot of U.S. demand for uranium will materialize as that moves forward, and the funding has begun on that. I mean, I think between HALEU and LEU, it's close to $3.4 billion. So that's one thing that I think is headed in the right direction. In the U.S., I think there's a capacity from existing licensed permitted mines amongst six or so companies to produce 20 to 25 million pounds of uranium in the United States. That's up from 0 in recent years. But if we want to go beyond that, we have a whole host of members in the UPA that have uranium deposits that they're eager to bring into development and bring into production, but they've got to go through the regulatory timelines. And that's where Trump can be so helpful with the EPA, with BLM and Interior, and just with NRC and state regulated to really streamline. And part of that is we're trying to get uranium back on the critical minerals list. It was on in the first Trump administration. It's taken off in the Biden administration, and now we're working hard to get that back on because that legislates streamlined permitting timelines for critical minerals, and if uranium is included, that would be very important because we can't wait 6, 7 years to permit a
No.
mine.
Well, you mentioned Interior, and I've been talking to some of my friends and colleagues in Canada who have only loosely followed this, and I said, when a number of days ago, Prime Minister Trudeau was down at Mar-a-Lago sitting next to Trump, did you notice who else was at the table? And most of them it went over their head, because the big thing in the news was more about the dynamics between Trudeau and Trump than who else was at the table. But I said the most important pick, arguably, that the president has made is Doug Burgum,
Okay, I
because
didn't see. He was. Yeah,
yeah,
he's a good man, and he was being kind of considered for the energy department.
right,
I had the opportunity to talk with him at the RNC in Milwaukee, and he said, I'd be honored to serve in that, but I actually want to serve in a bigger role because I think energy is gonna thrive under Trump, but I want to break the deadlocks in some of these agencies like Interior, BLM, EPA, and it's not surprising that he landed in that role because I think that's going to unlock oil and gas and uranium and mineral production in
Well,
the United States.
I think he got a bigger role than anybody would have dreamed because not only is he going to be the Secretary of the Interior, assuming he's confirmed, I think he's going to have less of a problem than some other ones are, a not existent problem, but he's also going to be that new super czar
Yep.
and have some oversight of energy in the EPA and Interior. And he's on this, and this was my point about him being at the table with Trump and Trudeau. He's on the President's National Security Council.
Yep.
And nothing goes farther to show just how serious President Trump is going to be about the fact that our mineral security, our energy security, all of it, this is national security, like a lot of us have said all along, and like he said all along.
Yeah. Yeah, absolutely. And it really is energy security and national security. I mean, a story that's kind of underreported is, we focus on the reactors producing electricity to the grid. We have another 104 reactors and submarines and aircraft carriers that we've been living off a stockpile of U.S. origin unobligated uranium that was built up in the 60s, 70s, and early 80s. That stockpile is coming to an end at some point in the next decade. And it depends on how quickly we build Virginia-class, Columbia-class submarines, AUKUS, and some of these other draws on that uranium inventory. We need new U.S. origin uranium production to serve our defense needs early in the next decade. So there is a clear connection to national security.
Wow. So much stuff to cover, but again, I think this is a story that's intriguing from a national security perspective, from a public policy perspective. Certainly, we've already seen, and for those watching the video version, I got to put this up on the screen again. I've said many times that when these sectors, all the investors are all worried about AI stocks and about the Magnificent Seven and cryptocurrencies, but when everybody gets the sniff of uranium, it's like an elephant jumping into a kiddie-sized wading pool. We've seen the first fruits of that in the last few years, but this is only the beginning of what I think is going to be a great long-term resurgence. So, folks, make sure, and it's both on the screen, it'll be in the notes to both the video and audio version as well. Keep up with Scott at Uranium Energy Corporation. Keep up with yours truly here at both the National Investor and Strategic Media. A lot more is coming, and I'm sure we're going to be learning earlier rather than later, once Trump is sworn in, of the additional public policy issues involved here. And Scott will be looking to you for those as well.
Great. Well, thanks, Chris. And for uranium investors, take advantage of this pullback in the spot price. It's temporary, but some of your favorite uranium companies are selling below their recent highs. So,
Well, and I just did my own interview a week or so ago, and I said that if you look at everything fundamentally and the added demand side of things in just the last couple of years over AI and everything else, uranium at $80 on the spot market is every bit as juicy as it was at the low at 20.
Yep. Couldn't agree more.
Yeah. Scott, thanks so much. And again, a reminder, folks, stay tuned to both of these channels or all of these channels, because not many days hence we'll have Scott back and we'll go into a specific update on Uranium Energy Corporation as well. Thanks much, Scott.
Great. Thanks, Chris.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.